Good morning, good afternoon, good evening, whenever you're watching this. This is Taylor Watson, What's Investing, and today I'm going to talk about how I research stocks or how I look for investments and where I get my information and how I come to the conclusion on what I own. So one of the main ways is using the NZX platform, and you can use this and go on the main board and just look at every stock, how they're performing for the day, or over time, the volume, the price, and everything. But one of the main things I use is dividends to see what has been announced dividends wide on a full table here, seeing the amounts, that's cents, and seeing the imputation credits and stuff like that, when it's going to be paid and the ex-dividend date. So this is super handy to see a big sheet if you own a lot of stocks instead of going through them one by one. So it's super handy. Another thing you can look at is upcoming results. So this can be companies you own for their full year or their half year reports. So if you know that the company has been performing well from a half year report, you can infer whether their full year report's going to be good or not and invest before this announcement. And that can make you some good capital gain there. That's what I did with Hallensteins, which I'll show you soon. But here I can see that Trustpower has their half-year report on the 5th of November, so I'll be looking at that when that comes out, and I can look at information from there to infer whether I want to buy more in the future, look at the where they see themselves going and their expectations. Upcoming meetings, I haven't really gone into this because I don't really know anything about it, but that is there information-wise. There's upcoming listings for new securities, and there's just the broad announcements for every stock. And P basically means material, which means it's generally important towards the business, and will have a material change in the stock price, either up or down kind of thing. And this is generally what full year, half year reports, dividend announcements will be labeled as, and lots of smart shares things happening. But sometimes you'll open up the main board and you'll just see Contact Energy Limited updated, they announced their September operating report, so you can look at that and see what's going on. And Contact Energy is currently up 30%, and that'll be to do with other factors as well, like the government announcing help or them being included in a global index fund and stuff like that. But that's a main way I use the NZX website to get information. So if we look back in hindsight in one of my holdings, we can look at Hallensteins, which is one of my best performers. I think it's the best one actually, apart from Tesla maybe, at 43%. And we can see that it has, since lockdown, gone down heaps, then bumped up, kind of flattened out and gone down a lot, and then bumped up a lot, and then bumped up again. So we can look in hindsight at why this went up and why I was investing in it prior and a lot more after that first bump. So if we look at Hallensteins, you can use the query and just search up the ticker name for a stock and go onto their kind of page. And you'll see the activity for the day, the yearly change in price. So it's pretty much just recovered from COVID. The performance for the day and the fundamentals like the price to earnings ratio, the earnings per share, net tangible assets, the dividend yield, and the amount of securities issued in the market. And then you can look at the charts, which you'll know from Google or Sharesies or Hatch and all that. They've all got charts, and you can change it with different overlays and lines, and even has candlesticks for those keen goers. You can also look at the dividends more in depth to see the past dividends. It doesn't go back very far. For some companies it will, or you'll find more in-depth information on other websites, or like Yahoo Finance is one that has useful information, or even Seeking Alpha for American stocks. But here is just a great easy way to see what's happening and manage your kind of stuff. So if we look back here around these two bumps, we'll see that it's around 18th, 19th, 20th of August, and then again about 24th, 25th of September. So if we look around those dates, there was a update there on the 19th of August, so that was right before. That was pretty much on the bump there, so I was buying before then, and then that bump maybe buy a lot more, and same with after that second bump. So, and then that second bump was around here, which is obviously the full year report. So if we look at this first report, it talks about how there has been an increase in unaudited sales for the past 12 months of 0.1%. So they're pretty much on par with last year, even with COVID. And that was astounding numbers to hear from for investors' point of view. Like for me, hearing that a company that I've been investing in the clothing industry, in online sales, has been performing sales-wise pretty much the same as last year, even with all these lockdown, shops being closed, having to move to online shipping, having all those delays and everything, that is good to hear. And you can infer that if it's the same there, they also delayed the dividend in the past. You can infer that they are going to pay that dividend if you see numbers like this, because they delayed it, unsure of how they're going to perform. And you can see that the net profit after tax had a decrease of approximately 5%. And then you can read the rest and infer whether you want to buy more of the stock or not. And that was pretty much where the first bump was, as investors thought that that was better than expected. So there was like I don't even know what's that, like a 30-25% gain on the stock that day. And then the full year report announced a lot more in-depth information on their e-commerce, Glassons, Hallensteins. But to put it short, again, the numbers were up. The decrease was less than the last thing. And you can see the gross margins and everything. But an important thing that made this dividend raise, but they declared a final dividend of 24 cents per share in December, and the interim dividend that was delayed from June will be paid in September. So that caused another massive spike from $4.50, $4.60, all the way up to $6, which was its previous price here before COVID. So you can use the NZX to be on these bounces, and you can use the first bounce, say, of a previous announcement to infer what will happen in the future. Obviously, with Hallensteins, it was a little closer in time frame. But with that first announcement of their earnings and profit not being bad off after COVID, I inferred that the dividends would be getting paid and that they would be huge, as Hallensteins had big dividends in the past. So I started investing a lot more frequently than I was in the past, and that's where I received big gains and big dividends. So that is one way I use for every stock I own, is to look at that on the NZX. Another way is to watch YouTubers who basically go do all this research and information for you. Yes, they're not all to be trusted, and some of their information might be biased or only show you the positive sides of a stock, so you got to watch lots of them and do your own research, as all of them say, including myself. But you got to take everything with a grain of salt, but they're trying to show you the best information possible to, one, grow their fan base, share their journey, and it's just intrinsically valuable. So one of the YouTubers I watch is Solving the Money Problem. I've watched pretty much every video he's uploaded over the past year, and he mainly talks about Tesla and then the companies around that, like Nikola, Solar City, and their competitors and things like that. And I find his videos very informative and a fun style, as he's quite blunt, straight to the point, and a bit cheeky at sometimes. And then another one is a more serious, analytical YouTuber towards Tesla and just technology around that. So Tesla is one of my biggest holdings, so that's why the channels that I watch are heavily focused on them. And there's Joseph Carlson, who does bigger videos, like 20 to 50 minute videos, overviewing the market over the past few days, the news in the stock market to do with pretty much anything: Nikola, TikTok, Apple, Netflix, Japanese stocks, Warren Buffett, dividends, just everything. So I don't watch all of them, but I watch the videos that interest me, and I generally watch all of them as he presents them with quite a calm, compelling, informative manner. Another one I watch to look at stocks to buy is Dividend Data. So he kind of does a stock review between 5 and half an hour, 5 minutes and half an hour. I've just found him probably about 2-3 weeks ago, and he just does your generic videos on why he owns stocks, and I found his videos to be quite relaxing to watch and fairly informative, and he talks about the downsides of the businesses, which helps, as some YouTubers ignore that. Another one that most of you will probably know is Andre Jick. He has a magic and finance approach to his YouTube channel, and he does your generic how to start investing videos and all that, but he also goes into what stocks to buy at the right time, blah blah blah, recession-proof stocks, and he strictly looks at like the fundamentals, the PE ratio, the dividend yield, things like that, and talks less about kind of the more specific details of the businesses and just looks at the numbers a bit more. I assume he does more in the background, but he keeps it pretty simple on the surface and talks about like stimulus checks, taxes, real estate, things like that. Another one who I watched to just kind of follow the personality, his beer reviews at the start and end of each video, and talking about his dividend growth portfolio in his life, is JJ Buckner, another great personality to watch. And there's another one who's I haven't watched recently, but I used to watch a bit in the past, which was Graham Stephan, who mostly talks about real estate and stocks again. And there'll be a few more New Zealand ones like Investing with Tom, Investing with Sam, or Stocks with Sam. And there's a few other ones like Ethan Chase, Investing Sensei, and can't remember the other ones, but they're all personalities I like to watch and compare all of their information and compile basically a thesis on a stock I want to buy. And that is where my portfolio kind of sits. And then some of it's just personalized interest, like Delegate Group was I did an essay write-up on it on my first year of uni and found the company to be interesting. So I think I invested in it back here and didn't really do too much with it. And then kind of haven't really done much with it overall, but it's just an interest stock. And I might go deeper into it in the future, and I might not. And Helen Signs is another interest stock, which I went deeper into because it performed well, because that's where I buy most of my clothes. And same with most uni students and stuff like that. It's the generic brand. And then, most of these other stocks, like the dividend growth, your dividend aristocrats like Pepsi, Coca-Cola, Realty Income Corp, Procter & Gamble, those are all from watching YouTube videos, looking in the fundamentals and the financial documents that are all provided on the different investing websites. And so lots of it is to do with research, other people's research, taking that with a grain of salt. Some interest, because you gotta be interested in this stuff, because I'm not putting in a heavy amount of capital. I've only got $6,000 in here. It's not a big 50 to 100 grand. So if this were all to go to zero, I would still be happy, because I've had hours and hours of fun doing this, learning about everything, and I'd be happy to restart at zero. Hope it doesn't happen, of course, and I think it's very unlikely. But yeah, it's a part of the journey. So you got to have fun doing it, and can't go too overboard as well if you're not investing too much, because if you spend more time than minimum wage than a minimum wage return, then you're not actually doing too much productive, unless you're learning on top of all that and account for a discount rate of the future as your assets will grow. But yeah, that is me and how I invest. I might do another deeper video in how to use the NZX a bit more slower, and going into more features, just as a separate video, not talking about why and how I do it, just talking about the broad overview of the website, and maybe get into Sharesies, YouTube, and all those features. But for now, that is me. That is how I invest. Happy investing, and don't take this as investment advice, just how I do it and how you can choose to do it. But always do your own research, as long as watching YouTube and doing all that stuff. It'll work, or it won't. Catch you later.